Hey everyone, Larry Bailey here with Brian View from FinLocker. Hey Brian,
Larry,
we wanted to have um, a conversation about borrower education. For those that don't remember, I started lending in '93 as a processor. I quickly figured out that loan officers, salespeople made more money than processors. So for the next 19 years, for a total of 20, I spent time as originator, business owner, the whole thing. And Brian and I met each other at a dark corner bar, I think is the story. Is that what we
right?
did, Brian?
Yeah.
And he's like, "Psst, I got a thing. Come over here and check this out." And so we showed FinLocker, and I thought this was really important. Truthfully, all kidding aside, bar education is a huge deal for me. Education in general is. But one of the reasons why borrowers always call me back is because somehow I help them or I help their family. True story. I had someone call me back in December. His son was buying a house in Texas and he wanted to get my vibe on if the deal was cool. I hadn't talked to that guy in 20 years.
Amazing.
Mitch Germansky. Um, true testament to you help somebody with if you make a serious impact in someone's life and you don't change your phone number and you stay online somehow, they'll find you and they'll come back to you one way or another.
Are you sure it
So
wasn't all those pumpkin pie recipes you were emailing through your CRM to
it
him?
could have been that. I'm really not sure positively, but anything's possible. So
Yeah,
anyway, I wanted to do on this installment of Recorded Conversations, Brian. I thank you very much for joining me. I thought this was a great opportunity to really get to the core of what you're doing and tell everybody who you are and what FinLocker is. And I'm always a fan of backstories because that's where context meets reality. So
sure.
tell us more about
Yeah.
you and your whole life story from like when you were born.
So we won't go that far back, but you and I kind of got into the business around the same time. I started in 1991. I started as a loan officer, and my first job as a loan officer was today we would call servicing retention, right? So
Right,
we
right.
were we were basically mining a large Ginnie Mae servicing portfolio. And you think of, 1991, the par rate was somewhere in the 10 handle. And we were, essentially doing rate and term, streamline FHA refis, taking people from 13 and a half to 10 and a half, saving them a ton of money, blah, 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 blah. The the market quickly started to rates started to drop precipitously over the next 24 plus months. And so I went from being one of five loan officers to a senior guy with a team of 50, and you know graduated
Congratulations.
graduated into management early in my career. Didn't originate much directly after 1993,
Oh,
and
wow.
had been in different production management, sales leadership roles pretty much my entire career. I spent two-thirds of 30 years in third-party originations management. And why I share that and why I think it's relevant is where in that role I was able to see lenders of all sizes, all shapes, in all geographies with different models, and really start to understand how a traditional distributed retail model that relies on referrals from community-based realtors differs from a consumer direct model versus a lead acquisition model, et cetera. And so um, about 5 years ago now, I made the move, exited out of mortgage production management. By the way, I missed
Yeah, what a great
the
move. That
I
was
missed
perfect timing, Brian. There
I
you
missed
go.
the three I missed that 3% market. I was in the fintech space by then. But I was intrigued by what FinLocker was working on at the time. I invested early in the business when I was still at Flagstar. I've known the founders from business relationships back in the late 90s. And the company started in the, trying to solve for some pain points in the middle of the loan manufacturing process, specifically in digitizing bank statements. So
Okay.
today we call that, digital verification of assets, right?
Right, right, right.
Been
They're
that
actually scanning the statements to OCR to lift the data.
No.
No.
FinLocker 7 years ago had created a secure financial locker for a consumer, so thus FinLocker. They created this vehicle for a consumer to connect to their bank account or bank accounts, and then extract all the transactional data from those bank accounts directly and present it to a processor and underwriter in data form, so that the processor and underwriter could then parse through, identify large deposits, do all the things they would do on
Sure.
paper, but they could do it digitally.
Which sounds so basic now, but this was
Yeah,
7 years ago,
yeah,
right?
yeah. 7 years ago,
Wow.
there was two things going against that solution at the time. Number one, loan up processors and underwriters, kind of were like, this isn't going to work.
Yeah, it's not gonna work.
Which is code for this is going to replace me, which we know it never was.
Right.
And honestly, loan officers weren't ready to have that conversation with their borrowers to, basically tell them, connect your bank accounts here, right?
So now, wait a second before you go on there, because this is again, back in my day.
Yeah.
So when people talk about things that don't work, or it's never going to happen, or I can't get my borrower to do this, right? So I'm going to go back again. I'm going to go back to when we used to carry around paper application packages.
Yeah.
Borrowers wouldn't give. We're never going to be able to do an application over the phone because a borrower will never give me their social security number over the phone. And it was like, hey, I need your social security number. They're like, I'm not doing that. I don't know who you are. I'm like, you called me. Like,
Yeah.
let's move beyond this. And then it was, no, borrowers are never going to e-sign. I don't know if you remember that whole thing.
Oh, yeah.
They're never going to e-sign. They're never going to do that. And then it was, they're never going to give me login credentials so we can synchronize the data, right? That was a big one.
Yep.
And now, now we're going to talk more about what FinLocker is doing today. But over the time frame of this period, it's always been, it's not the borrower stopping you, it's the salesperson, or it's somebody in the operations who like, I don't feel comfortable doing that. So therefore the borrower's never going to feel comfortable doing that.
Yep. The way the conversation started, which is around borrower education.
Right.
Who is the primary source of borrower education? It's the loan officer.
Typically it's a salesperson. Yeah.
And how, if we put ourselves in the shoes of a consumer, especially a home buying or mortgage borrower, which is our consumer, how often are they really going to do this process in their life? What is it, still once every 6-7 years, something like that?
Not as many as the loan officer goes through every day.
Yeah.
That's for sure. Yeah. Some people are more than others, but an average person, like I think of my family, my mother and father-in-law, who are now 80, have been through a new mortgage process 3 times.
Yeah, there you go.
Which is a lot. I mean, they're probably ahead of the curve, but yeah, it's not very often.
So I always think about this in the context of, okay, you have a consumer who's not going to do this transaction very often in their life. And so they're never going to get expert at it, and nor should they.
Right.
And they're coming to you as a loan officer for your expertise. And so if you have the ability to deliver this modern experience, right, through technology, and you can make that part of your talk track, and I don't want to call it a story because that stories sound fabricated, but it becomes part of how you're representing and presenting your products and services. If you've developed the level of trust based on your expertise, they're more likely and most likely going to do what you tell them to do.
Right. Well, we call that in marketing, we call that brand building, right?
There you
So
go.
if somebody learns that, hey, listen, go to Larry, go to Brian, like they're going to take care of you, whatever you got going on, they're going to figure it out, and they're going to make a plan for you to help you buy a house or figure out when they should refinance, or if you should do anything at all, just go talk to them. That's all we want, right? And that's kind of what really drew me. When I first met, when I first met your solution here, I had a lot of reaction. So you go from bank statements.
Yeah.
Education was like, where did you make that move? Like, how did FinLocker make that move?
So I was I'll share my screen and we can just do a little
please.
walking, talking. while I was at Flagstar, I got to know the platform and the product. And again, they started with the verification of assets. And so I was an advisor to the company, and we started having conversations around, you know, you've got this repository, you got this ability with the technology to securely store and use the consumer's direct source permission data from their financial accounts. We know we developed this for this point solution in the middle of the loan manufacturing process, but what else can we do on top of this? And so, if you think about one of the things I like to present and show, and I'll go to the slide, is these brands, these logos at the bottom of the screen are all very popular consumer-facing financial apps, right? Okay. And consumers use them by the millions for very specific use cases and reasons. And many of them have the same that same basis of sourcing data that comes from the consumer permissioning access to it, whether it's your credit data for Credit Karma or your financial account data for Mint or Rocket Money. And so what we started to build on top of that foundation of connecting financial accounts was this concept of holistic consumer financial fitness with an angle towards mortgage readiness, because that was a gap that we saw in that consumer space in terms of what's available for a consumer. Yes, I could go get Mint and Rocket Money and understand my spending and create budgets. I can go get Credit Karma and understand how to improve my credit. Clearly, I can access the Zillows and the Redfins to do, real estate type stuff like searching for property or seeing the value of my home. But none of them had really developed a journey on top of those tools that led to a very specific outcome, and that would be mortgage readiness or home ownership readiness. And so that's what we've been focused on, Larry, is kind of doing two things for lenders and consumers. One is, the helping, and it's really relevant in today's market where you've got the average first-time home buyer is in this kind of state of flux for a longer period of time than any generation before them, because of inventory and affordability and all the macroeconomic
stuff
factors
happening right now. Exactly.
Yep. So you've got this ballooning pool of otherwise of age ready first-time home buyers that just can't quite crack that code. So as a lender, where maybe before I would spend 4 to 6 months getting somebody from a place of, oh, I want to buy my first home, to actually doing it, it's now 18 plus months probably that you're going to have to.
That's an insane timeline. And I can tell you, as a loan officer, you're lying to me if you're in touch with that person for, I'm going to say even 4 months, let alone 8 months, let alone 12 or longer. It's just not true. It's just not true.
You're never, as an individual, we're never going to be able to be as connected unless we have some kind of digital experience that can extend how I connect with that prospective home buyer, right?
Yeah. Well, I think you mentioned some stuff on here, but if you have if you had the ability, I'm going to use a financial advisor, doesn't matter the company, but if a financial advisor had an app and we were seeing the same information and we were touching base every 4 or 5 months, and we could both see the same data. I can go on there every day to see what's going on, or something happens and the advisor says, hey, by the way, you see that little blip thing there? Yeah, that means that we should probably talk about something. Yeah. I'm going to be on the phone with that person. Be like, hey, what does this mean? Like, what do you mean? Like, what should I be looking for? And so what caught my eye was when we went through this. Yeah, if you don't have Credit Karma app, or if you don't have, everybody's got Zillow app, right? Because they're doing some kind of house porn search for something. And back when Mint was alive, that was great. But none of this is really about getting, to your point, getting ready for a mortgage, getting ready. And I've got, fortunately, my two children have me as a dad, so I've taught them a lot about mortgage, taught them a lot about credit.
Yeah.
But it's rare for any one of their friends. Like, one of their friends still doesn't even have a credit card, and she's 25.
Right.
Like, yeah. And my daughter's the one saying, hey, how are you going to do anything?
Yeah.
And she's like, and the friend's like, well, what do you mean?
Right.
Right. It's crazy. And so, anyway, I think I think it's a great slide, and yeah, consolidating all that into education towards home ownership
I'm just gonna,
is great.
yeah, we can talk with these as backdrops because to me, Larry, all of these slides that I'll flip through and these screens, these are all conversations that can be happening, right? So, if you've got your early journey, first time home buyer, and maybe they don't have the 786 credit score that's depicted here, maybe it's 586, right?
Mhm.
I think before we hit record, you shared,
I was going to bring that up. Yeah,
yeah,
yeah. So for those that are watching, so I help a customer who does a lot of construction to perm. And they get leads in from builders across the country. And so, people go into a builder's office and they're like, "Oh, I want to get this house." The builder's like, "Sure, get qualified." So they fill it out, and one of the clients I support gets. So far this month, they have 100 clients, Brian. That so it's about 30% of all the leads that came in so far this month. 100 human beings with families are below the credit threshold.
right,
And I'm looking at that and I'm like, dude, that's 100 just in 10 days. That's a
yeah,
100 people. How are you going to connect in let's say you even had 50 loan officers. Let's say so that's two in 10 days. That means that every 10 days on average you get two more. And if the journey is 12 months, what are you going to
yeah,
do?
all
Like, what are
right,
you going to talk about? And so I'm like, this is a no-brainer. To me, this is a no-brainer because it helps people understand. And borrowers just go on here and I mean, this is on their app. Do they
yeah.
pay for this? Does the borrower pay for this?
Borrower pays zero. We basically sell an enterprise license model to lenders. We have a license model that can go down to an individual loan officer that's part of one of our enterprise clients. We're working on what I call an untethered LO model. So if we have a loan officer that would love access to this product but doesn't work for a company that's working directly with FinLocker, we'll have kind of a place for those types of loan officers. But yeah, the consumer pays nothing. The lender loan officer pays a license fee to have the ability to provide this to all of their
For
prospects
borrowers, right?
and clients, frankly,
Yeah.
because there's value, on both sides of it.
Well, yeah, I mean, because you do want to, I mean, typically, again, unless somebody's living in the forever home, which happens. I think I might have
Yep.
finally found mine after like 12 moves.
Yeah.
So, but for most people, they want to make sure they're staying on track. I saw a post on LinkedIn that last week that's like, oh, another great day in the mortgage industry, lost 4 deals today, and they rattled four of them off, and there was only one problem with all four, which it was a single wide built before 76, I presume.
Yeah.
So it was nothing, literally nothing you can do other than offer them a construction loan to rebuild a new house, right? So maybe there was no loss. But my point was I responded back and says, sounds like there's 3 out of 4 that you can do something for in the future.
That's right. Yeah. And what are you doing to stay meaningfully engaged for whether it's 3 months or 3 years that it's going to take for them to get to a place where they're ready to transact, right?
Yeah, and that goes into here, right? So I know this is cool. This is the how do you get ready, and you guys give stars for you make it into a kind of a game, which is
Yeah.
slick. It's clever. It's clever, but they get stars for accomplishing certain goals. Is that the way this works?
Yeah. What we're not, Larry, is we're not doing pre-approvals here. You could argue, and I do have some clients that will call these pre-quals, but we don't represent our product as a pre-qual engine or a pre-approval engine.
Yeah.
We're really focused on educating and preparing a prospective home buyer for a successful mortgage application. So the more they can engage with the product and use the tool and get these 4 stars, we're basically grading somebody on 4 dimensions. Do they have enough verified cash to close for their down payment, closing costs, and maybe a little reserves? Do they, income and employment, is it where it needs to be? Is their uh, credit score at or above X? And then we actually calculate their housing and total monthly debt to income ratio, and we use 43.5 is kind of that proxy for you're good here. You should feel good.
Yeah.
And so somebody that gets to 4 stars in our platform, especially if they've used their direct source data. And what does that mean? It means they've connected directly to their credit profile. So we're pulling right from the consumer's credit file. It means they've connected the bank account or bank accounts that they're going to use for verifying assets for closing.
Assets.
And they've they've told us about their income, their job, and and how long they've been employed. And so if they've done all that, we have enough data to, again, in the spirit of giving somebody confidence at time of approval, that our 4 stars, we believe, is a really good proxy for someone that's going to be successful on the application side. And so what I think about is the loan officer that's carrying these bigger pipelines of not yet ready borrowers.
They didn't say no, but you couldn't say yes.
That's right.
Yeah.
And so, yes, we should use our CRM, and yes, we should have regular cadence of communication that goes out to consumers through our CRM. And not saying that's a bad idea. I'll never say that. But the reality of it is do those emails get open? Do they get read? Do they get engaged with? Are they adding real value to the recipient? Some may not. What we offer is the chance to give that not yet ready consumer a tool that's going to live on their phone. And I want to say that again, it's going to live on their phone, meaning you, loan officer, are now on that consumer's phone 24/7, 365. And so when their credit score updates, which we update the scores every 7 days, if they already own a home and they happen to be tracking that property in the app, when the value is updated every 30 days, those are engagement opportunities, right? The app is either going to send a push notification, or there's going to be an email journey from the app to the consumer telling them there's an important data change, log back in to check it out. And then I don't know if I have a slide on it, but somewhere in here, we probably have something that looks at, it shows the branding. I'll just get, right here. So
there it is. Yeah.
So we have the loan officer lender is always front and center to the consumer in the experience, and then they can even partner with a referral partner, so they can co-brand, with an agent and kind of have that experience there as well.
And you can customize. I think I asked this before, but you can customize that other agent to be the other partner, whether it's a builder or whatever.
Yeah, there's some light work that we would do, but yes, for the enterprise clients of ours, we definitely can do that. Yeah. So it might be meet your team, and the team could consist of 2 or 3 people on the team that are going to be there for support for that home buyer.
Yeah, and I think back, right? So I think back when if I ever got into a spot where I was going to go back into lending or back into the mortgage production side, I think about the tools that I would grab. All day, right? I customize everybody else's Encompass to be best practice.
Yeah.
I can build whatever I want on the custom dev side. But none of this actually speaks to the borrower. Like, right. And none of what I do speaks directly to the borrower. And I can't tell you, for me, how important it is to be able to talk to the borrower about something other than their friggin' loan.
Right.
Like the last thing they want to talk about is their loan. I want to talk about, hey, how's that apartment you're living in? How's your landlord doing these days? Oh, you want to get out of that? Great. Let's talk about what you have to do so I can get you into a house.
Right.
Let's go over your assets. Oh, you spent another $500 on basketball tickets, or, not to pick on basketball, but some type of entertainment. Sorry for basketball fans out there. I'm okay with basketball. But my point is, I look at it and, like, I went out to dinner with some friends and it was a $300 night.
Yeah.
Which you might not think is a big deal, but if you're trying to save up money, you get to have that. If I had this and I was looking to buy a house and I needed that extra money for my reserves to qualify, I would have the education be like, hey, let's stay in because I'm trying to make sure I can get this house as soon as one comes available, So I think that's really the important question. So when you go through because you've been doing this now as a product for how long? How long has this been out in the market?
So the version of the product that's in market today is probably like 16 months,
So it's
fully
new. It's
mature.
new. I mean, it's
Yeah,
fairly new.
we've been did a full relaunch of the mobile because we're a native mobile app plus the branded website.
Okay.
And so for both platforms, mobile and web, we did a total architecture overhaul and consumer experience UI UX overhaul. So the product that's in market today, like I said, 14, 16 months. And it's what's cool about it is we're still like in a pretty rapid development phase. So we've got a pretty good roadmap of stuff that we want to continue to iterate on.
Mhm.
So every 2 to 6 weeks, we've got a pretty substantial release that brings new feature functionality. And like as we speak here today on web, we're releasing a feature that because we have embedded real estate search, so you could be searching for properties, you could favorite properties in the search widget, and then when you save those properties, we overlay your budget on top of each property to show you that this property is within budget. And so now you could have up to 5 favorited properties that you could kind of scroll through and see in real time your financial, like whether or not it's in your budget, estimated payment, all that good stuff. So,
I wish we had that when my wife was helping us look for the next house. Like
right.
that's a beautiful home. You just can't afford it. You know,
So,
or somebody tells you this is the best I always had as a loan officer. You can qualify for it, but I can't afford that.
right.
That's happened a lot over the
I think
years.
to me, there's what you can qualify for, and there's what you're comfortable as a consumer saying you can afford, right?
Mhm.
And I don't think it's absolute either way. I think um, clearly you have to qualify if you're going to rely on financing, but is it a good idea in every case to go to the maximum qualifying?
Maximum.
No, not for everybody.
Usually not. Usually
Yeah.
not. Yeah.
If you're in a profession that has an accelerated earnings capability, then maybe it makes
Maybe.
sense, right?
Yeah.
But yeah, I wanted to show this slide because I think we spend a lot of time, like I spend a lot of time demoing the consumer experience, and equally important is what this does for you as a loan officer, this product. And so we're looking at an example of the back end portal of the FinLocker tool and a loan officer logging in and seeing the data on a specific consumer in that is using the app, right?
Gotcha. So I'm a loan officer looking in what my borrower Chris completed.
Yeah. So
Okay.
Ethan, the loan officer, is seeing what's going on with Chris, his prospective borrower, right? So, he can see things like when did Chris create the app? Well, February 7th. And when he last logged in was February 8th, the day after. Um, what's Chris's credit score? We show the loan officer the credit score in a 10-point band.
Okay.
And then you'll see kind of, in this case, this was a newer account, so we don't have a previous score, but you would also know the previous score, right?
And by the way, that's no soft pull at the lender side,
This is a
right?
consumer credit score, consumer soft pull. It's not impacting the score. It's going back to my original kind of statement. This is the credit score is Advantage 3.0. It's used for education and preparation purposes. But the way I always explain it is if I'm a consumer and I'm on this path of improving my Vantage score, it's very likely that my mortgage FICO is going to be improving kind of in the same trend line.
Right.
Models are models. Models are different. The Vantage 3.0 cannot be used for lending, but it's a great tool. It's economically feasible for our model, and it also enables some other simulator tools on top of it. But with this information right here, Larry, as a loan officer, Ethan, he has enough information on what's going on with Chris to have a real meaningful conversation at any point in the process. And if he's, a lot of times we have integrations with our enterprise clients where this data then feeds directly into CRM. And so it might be triggering other actions on behalf of Ethan, the loan officer, from the CRM based on, activities that are happening in the consumer's locker or app.
That's phenomenal. Yeah, I like the fact that you've got a full picture of what the customer is doing and how they're engaged. Um, when is any of this, Brian? When is any of this not a good fit? So you've had this, you've been running with the product in the current version for over a year. You're doing iterative updates. You're bringing new stuff in. When you talk to folks who are
Yeah.
like, hey, that's great, Brian, but this isn't a good fit for me, or they're like, oh, I think this would be great, and you're like, nah, it's probably not a good fit for you. When does that happen?
Well, it's rare that I'll hear anybody say this doesn't make sense. For one,
Right.
I think intuitively everything we've talked about, everything we've shown makes a lot of sense because millions of consumers are using these types of tools. Where my biggest challenge, our biggest challenge in adoption has been, especially in this environment when margins are compressed and every dollar's being analyzed. We don't replace any of the core tech stack stuff, right? We're not a CRM. We have CRM capabilities. We're not a POS, but we have POS capabilities. We're not an LOS. So where we sometimes our challenge is where do I fit FinLocker in my tech stack,
Yeah.
and then how do I pencil out the return, right?
Sure.
And
Yeah, how do I
so
measure the return? Yeah, yeah, exactly.
the way, and we're still answering this question in real time because, like I said, we're 14, 16 months with this iteration of the product in market. But we have a pretty cool use case of a client that is 100% of their inbound lead action or activity rather comes from social media. So
Yeah.
they're educating at scale on social media, and their call to action on all of their social posts is download our XYZ app, right?
Huh.
And so and they've been wildly successful in getting people at scale to download this app. And just as a back of the napkin, case study, I think I even put a post on LinkedIn about this. In a 10-month period, this client had 5,000 consumers who they never knew of before download and create an account in their version of FinLocker. So at a minimum,
That was the
if not
source of the lead, basically. That was the lead.
exactly.
That was the aggregator. Yeah.
Yeah, at a minimum, they had first name, last name, email address, and a mobile number. If that's all the consumer did, that's what they had to do to create the account. They had those data points at a minimum, right? But the way our app works is we ask questions of the user, like we ask, where are you on your home ownership journey? And then we turn that into a persona. So this case, Chris said, I'm ready now. Well,
Great.
ready now is going to trigger an immediate phone call from
I
Ethan, the loan
bet.
officer, right?
Better.
Yep. And so as the user uses the app and does more things like connects their credit, starts linking bank accounts and credit cards and creates budgets, there's more life that comes to the app. And so your initial 4 data point lead becomes really enriched with all of this data and intent behind it. So in that 10-month span, and most of the education that these guys were doing on their social was all in the context of early first time home buyer education,
Okay.
not necessarily people that are ready right now.
Right.
And so
They're interested somehow in getting a home someday.
yeah.
Yeah,
So
yeah.
in this example, they had, of those 5,000 new leads, they in that 10-month period they closed 30 mortgage loans, all
Wow.
purchases. Um, they're in Southern California, so pretty good loan balances, and
Sure.
they run a broker model, so 2 points or 200 basis points top line revenue, and so their ROI for their first 10 months using our product was like 245%.
Not good enough,
Uh,
Brian. It's not good
Not good
enough.
enough, and it didn't include the 10
Right.
referrals that they gave to their real estate partners of consumers who got themselves to a place of being ready to buy and finance, and then they introduced them to their referral partners. So I share all that to say that's one of my challenges as well is getting loan officers to have a different mindset on how soon and how early should I be actively engaging with prospective home buyers. And I say it's never too soon,
It's
never too
never too
early.
soon. And I shared, as I don't want to make this conversation too long because people are might be going, how long, how far are we going? We're gonna talk for a few more minutes about this. And I wanted to really share again, when I believe in when me personally, when I believe in something, I'm like, yeah, you can't convince me otherwise. So when I look at this product, there isn't a single person, like seriously, why I wouldn't ask a borrower to commit if they're not saying yes to me now. If
Right.
somebody's saying yes to me now, I'm probably not doing this, but I'm doing this towards the end.
Yeah.
And I want to do this afterwards to say, hey, listen, by the way, we also have this thing because I'd love to stay in touch and keep you on your goal to your next step, whenever that is. But for everybody else, for me, it's a litmus test. Like if I'm working with a client and I'm like, listen, I can't, and those hundred people that we're talking about, every single one I'm saying, listen, we're here to help you on your readiness for home buying. One of the first things you have to do is download this app and log in and start connecting, and we can have conversations so I can coach you on getting ready for everybody who doesn't do that. I can start to go negative and be like, oh, I guess I'm not the right fit. I guess this isn't the right time. And I can just kind of drip that into foreverness. Like they're probably never going to do anything.
Right.
But everybody else who's like, yeah, that's gold. That's a golden ticket. Like, let's keep talking. I'm working
Yeah.
with you. And I cannot express in any way, shape, or form more than as soon as you start to help somebody change their life where nobody else would work with them, raving fans all day long.
As evidenced by the phone call you got from somebody that you did a loan for 20 years earlier.
Crazy.
Right.
Another example was I'm in South Jersey, so there's a guy. There's a few stories I remember, but these stand out where a guy called me and he's like, "You can't lend me money." I'm like, "Okay, I give. You called me for money, but I can't lend you. Why can't I lend you?" He goes, "I'm not borrowing enough money." I said, "How much money do you want to borrow?" He said, $25,000. I said, "Okay, what are we doing?" He goes, "I'm refinancing my investment property." Now, if anybody knows what I just said, you know that there's no fee limits on investment properties because you're considered to be an educated consumer. And so I said so as soon as I heard that, I said, I know what's going on. I said, listen, I said, I'll do as many as you want, but my fee is $2,500 per house. He goes, okay. I said, how many do you have? He said, I have 25.
Right. Right. There you go.
And so, this is the reason why I bring this stuff up is because I think you guys are doing a fantastic job, and I love getting the word out on stuff that people are doing that makes sense and promotes and ultimately helps our borrowers. Because again, like I mentioned earlier, I think of my daughter's friend, and I'm just like, she doesn't even understand how important credit really is,
Right.
or how to start to save for a down payment, or why renting is fine, but if there's an opportunity for home ownership that makes sense, you should explore that.
Yeah. Totally.
And so thanks for the work that you're doing here. Um, any questions I didn't ask you that other people you think would be important to know about this or FinLock or anything like that?
Now, the only thing I'd leave you with, Larry, and you and I talked about this the other day when we had a different conversation, is most loan officers, most lenders have their call to action apply now. And that's great for the consumer that's ready right this second. And no
Mhm.
one's saying change that. What we've introduced is this ability to have another call to action for the 3 out of 10 or 7 out of 10, I don't know, somewhere in between there, that aren't ready to apply now. And so that's just one of the mindsets that we're trying to help educate. Is there's options. You know, just because someone's not ready now doesn't mean they're not going to get themselves to a place of readiness, or that you as a loan officer can't help accelerate their readiness. And we just think we can play a small role with our technology to help scale the education that the quality loan officers are doing out there.
Brian, phenomenal stuff.
Thanks, Larry.
Yeah, it's been a pleasure for doing this again, Brian View. If somebody wants to find out more, what do they do?
I'm all over LinkedIn.
Do they knock on your door? Be like, hey,
Yeah, yeah.
yeah. So just go to if we just go to finlocker.com, right? And we can check up
Finlocker.com.
there.
We have a self-serve demo. You can play a little 5-minute demo, check it out. there's a form there. You can meet with one of our team members, or you can go to LinkedIn, DM me, and I'll answer you.
Yeah, the demo's really cool. Thanks for doing this today. And
Yeah.
for anybody watching this, again, if you're not figuring out how to educate your borrowers, I guarantee somebody else is.
No doubt.
But plain and simple. All right, Brian, take care.
Thanks, Larry.
You know.